Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning market webcast. Okay, so we talked yesterday about the band ride likely being over and heading down to test the 9-day. The pop up into the Fed day actually preserved the band ride. I wrote down here the band ride was ended. That's incorrect. We did test the 9-day, and we are testing the 9-day. Unless something changes dramatically, the band ride should end today. So let's hop over to the hourly. So we hop up, FOMC reaction, and they reject. So you've had a couple of rejections on consecutive days. 58.75 and what is that, 49.25. You had a low here. What's more interesting to me is that you've now made a lower low during the course of Globex, 17 versus 15. And if you get enough of a bleed down, it opens up down here. Weekly pivot 28.0275. The mid-band has been fairly well-behaved resistance all the way through. And the reality is this is the bear's leg to kind of screw up. And we've seen this many, many times over the course of the years. It's a situation where the bears make a stand at a certain price level, execute a lower high, and then what they need to do then is finish to seal off a key area. In this case, it would be the pre-FOMC price at 28.26.5, which they've done a very good job of trying to seal off in the overnight. But the bigger area would be to seal off and to break the weekly pivot. You've got 2 days that are potentially directional days in the market, okay? I've talked in the past about flipping the field. Back in December into January, when the bulls started to gain traction, it's because they flipped the field on the bears and turned the weekly pivot into something that they had to defend versus something they had to break down and break through and conquer, okay? Right now for the bears, the weekly pivot every week is underneath them. It's underneath them significantly. It's been as much as 56 handles underneath them at various portions of the week. We came into the week with it basically being 25 to 30 handles underneath them. The only way they're going to fix that on a week-to-week basis is to break the weekly pivot and turn it so that when we open a week, the weekly pivot is above them. Then all they need to do is defend it. Bulls need to reach for it. That's how you wrestle short-term tape control away from one side and give it to the other. And until the bears can figure that out, then ultimately these dips are still going to get bought and we're going to bleed to the upside. They have an excellent opportunity over the course of the next 2 days to execute that move. How do you execute that move? 2 directional down days. They're already starting one so that we close comfortably below 28.0275, the weekly pivot. If they can do that, then with a 58.75 high from the prior week, that is enough price for the weekly pivot to open above where we're going to open Sunday night into Monday. So then what do the bears need to do? They just need to defend that area. It's a lot easier to defend than it is to try to conquer it, and that's what we have to see them try to do in the next 2 days. So that's what I'm going to be watching out for. Big day yesterday, about 25 handles. We're at about 55 for the week. So, you know, we are in weak protection mode, but I want to take advantage of whatever moves the market has, but we don't need to be running around chasing performance. That part of the week is done. All right, everybody have a good one. Join us at 9:20 for the Instagram hit. Take care, trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.